Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what do we see? Now, from a monthly perspective, we can see how the market is currently approaching a quite significant level of monthly demand and support. In fact, from here, multiple rejections to the upside were created. At the moment, we can see how the market has just reached exactly the same zone, from which there is definitely the possibility to see a potential reversal to the upside, as already happened in the past, every time that the market tested this zone. So from a monthly perspective, everything looks quite bullish, and we could expect the market to reject this level to the upside. Now, if we zoom in closer, we can also notice how, in creating this move to the downside, the market has also printed this M pattern. Now, in general, after the creation of an M pattern, what we could expect is a potential reversal higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. So here on the monthly time frame, we could expect a potential reversal higher for the completion of this M pattern at the neckline. We can also notice that, generally speaking, as we have an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the high to the low of the impulse leg, and we can see, in fact, how our upside target in this case would be the 0.32 of the Fibonacci taken on this impulse leg, which currently is lining up exactly at this area. And we can notice, in fact, how this 0.32 is lining up perfectly with this previous support and resistance, which actually creates confluence of resistance at this level. And since we have confluence of resistance here, this increases the probabilities that we could have a potential reversal to the upside for the market to go and test this high liquidity area. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can see how the market has just created a massive impulse to the downside without providing any kind of retracement. Now, any healthy market in creating a move to the downside should create a series of lower lows and lower highs. That is the definition of a downtrend. However, if you see just a straight line down, that is not a healthy market, and it means essentially that a correction is just around the corner. You could expect it to come quite soon. In fact, we can see, for example, here, when the market created this massive downtrend, we always had corrections along the way. We had a massive amount of impulses and corrections, essentially creating lower lows and lower highs, printing this downtrend, which was a healthy downtrend. In this case, this is not a healthy downtrend. We have just one push to the downside and no correction. So we could expect a correction to come quite soon, considering that, as we have already seen, on the monthly we're testing support, and we also have a monthly M pattern. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound, we can see how with the last reports we have seen a decrease of the net positions. We went from plus 59k net positions to now 15.6k net positions. So the net positioning has been decreased. We still have more longs than shorts from an institutional perspective, with 84,000 longs compared to only 69,000 shorts. However, the net positioning has been decreased, which is bearish for the pound. However, as we are approaching the support zone, what we usually get when we have a push to the downside inside of support is in accumulation area. So we get some kind of sideways price action, a double bottom, a triple bottom, some kind of reversal pattern. During that reversal pattern, that is where we have to check if we're actually getting an increase of the net positions, because in a couple of days we will have a new report. And if the new report we get an increase of the net positioning, showing that institutions are now adding longs and closing shorts, that is a good indication that we have high probabilities of a potential reversal to the upside away from that monthly support area, potentially completing that monthly M pattern. Now, if we go down on the daily time frame, what do we see? Now, from a daily perspective, what we can notice is that at the moment the market has just created a new daily lower low. And from here, there would be the possibility to start to see some deceleration happening from a daily perspective, which, if we get institutional longing inside of it, would further increase the probabilities of a potential move to the upside. Especially, it would be very important to see the market break back below this previous daily support that is now turned resistance. Because if we get a break back above this support, at that point, this previous support, which is now turned resistance, would once again be turned support. And on the retest of the previous resistance turned support, that is where we would have very good probabilities for a potential reversal to the upside away from this level. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound, we can see how a very important thing to keep in mind is that when we were looking at the net positions here, we had 63K net positions. We then had the decrease, and the increase here came quite quickly. And this is a situation that could happen also here if we get a break back above the level. So if we do get this break on the retest and we see institutional longing, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment the time to join the program is almost expired. So I really suggest to go and check it out as soon as possible, and you can take advantage directly from this button here, from which you can gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link to the website is also in the description, and I will see you in it.
If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.